Hi guys. So I want to talk a bit here about um, trend determination because it's at the root of pretty much all directional trading um, for chartists specifically, and I would dare say for fundamentalists as well. Um, it is at the core of what you're trying to do, or the tools that you want to use in the context of your trading. One of the first steps is almost always to determine the trend of the security that you're looking to trade, right? Um, and of course, there are different um, trends over different time periods. But we can talk about that a bit in a later video. Right now, I just want to talk to you a bit about the simplest and arguably most effective way of deciding or determining what the trend of a security is. Okay. And that is using higher highs and higher lows, or lower lows and lower highs. Okay. Um, and that is, in essence, looking at it from this perspective. So you have the SPY here, right? And we'll just start right here, right? This is a low, right? And for all intents and purposes, this is the previous high, right? I like to call them the relevant um, high and the relevant low, right? So relevant high, relevant low, right? Once you break through this high, right, which we did right here, right? Now you have a higher high. Um, and depending on whether or not you wanted to use this, you could call this the relevant low, and you would, of course, have a higher low. Or you could keep um, this as your relevant low, and you would have to wait until price pulls back, puts in a low, and then pushes higher, right? This is in hindsight, of course, so it looks like, oh, of course, that would have been, you would have made that your relevant low, but not so fast, right? At any rate, at some point, you get a low and you decide this is your relevant low, right? Um, so you now have higher highs and higher lows, and you keep following that. And as long as that stays consistent, right, then you have a trend to the upside, right? So you made another high, right? Made another low, right? Same thing. Made another high right here. Made another low right here, right? High, low, right? And obviously much higher here, right? Now, here's where it gets tricky. Here's a low, right? Which was broken, right? So effectively, the uptrend would have arguably been broken, right? But then this high was once again taken out right here, right? So this becomes your relevant low. This is your relevant high, right? So you're back in an uptrend, especially once this low is made and you push higher again, right? Now look, all of this is in hindsight, right? The determinations are all in hindsight. I understand, but it's important to know and understand these levels, right? Because I, especially in my trading, use these levels, right, as price levels against which to lean in my trading, right? These things happen on all time frames, so they happen intraday as well, and I use them, and other traders, chart traders, use them uh, to get low risk entries in whatever direction we're trading, right? I'm going to do one more thing. I'm going to show you a downtrend, but it's the exact same process in reverse, right? So you had this stock make a low, right, relative to here, bounce back up, couldn't take out the high, up here, lower again, right, high, and look, this is what's called resistance, right? And we tested that several times and couldn't get through, and then finally broke down again and took out this low, right? This arguably was a low as well, and it was a higher low, but it was both it and this low were broken, right? So you proceeded to push lower, and you're clearly in a downtrend here, right? Now, a lot of times what's done to simplify this entire process is using moving averages. Let's go here, right? And the longer term you make it, um, the more you can see the trend, so to speak, right? So one of the ones, people like to use is the 200 exponential, right? And you can clearly see that this is a downtrend, right? If I went back to the SPY, you'd be able to see a clear uptrend, right? Um, so when you hear people talking about moving averages, when you hear me talking about moving averages, they are, especially the longer uh, period moving averages, they're just an attempt to discern the trend of a security, so that you can make trade decisions based on that. Okay. So this video got a little bit extended, but I really wanted to emphasize that the simplest and most effective way of determining the trend of a stock is looking for the relevant highs and lows, right? And if you're making higher highs and higher lows, by definition, you're going up. If you're making lower lows and lower highs, you're going down. Okay? Any questions about that? Ask the trader at theartofsimpletrading.com, and we'll see you at the next video.